Hey everybody, welcome back to the channel. Today we are talking about Meet Kevin, popular finance YouTuber, almost at 2 million subs. He's one of the leading YouTubers in the finance space when it comes to YouTube and when it comes to getting people's attention on YouTube for stocks and business and finance investing related content. I want to make a video. Talking about my thoughts about what he just did. I'm sure you guys have seen it because I know a lot of you probably watch his channel. Look, I kind of think of YouTube as little separate sub communities, right? There's like makeup YouTube, there's like gaming YouTube, there's finance YouTube, and within those different sub communities on YouTube, which I am very happy to start becoming a part of and becoming an active community member in, because I think one of the main elements of purpose in life is having some level of community, even though you should always prioritize the individual over the community, in my opinion. But you kind of need a community because if you just are an individual, it gets very boring and very lonely. Elon Musk actually talks about this a lot, about like being in a mansion with no one to talk to. It led to a lot of depression in his life. So anyway, being part of a community is incredibly important. And when you're in a community, there are certain things that happen in a community. And when there's these things that happen in a community, the community reacts to it. And it's important for the community to offer a variety of different perspectives when trying to react ultimately to the bigger names in that community that are doing something. So for example, when Dave Lee and Tom Nash did a podcast and I did a reaction to that, that's sort of using how the community is interacting and the content that the community is creating to also offer your own perspective and opinion within what the community is doing. Meet Kevin's one of the biggest financial YouTubers on the planet because there's only one YouTube and he's one of the most followed YouTubers in the finance and personal investing scene. He recently just did a video that I think warrants a reaction because it's interesting to me to see how I think of my response to what he's doing in the market based upon the macro economic trends that are happening right now. And I'm curious to hear what everyone else thinks about it in the comments as well. He recently just sold 99.9% of his stocks or something. So that's about $20 million he took out of the market. He sold for a loss in a lot of these stocks because he was investing heavy in some of the high growth tech names. And obviously these stocks have been decimated. He sold out in November, sounded like a genius, kind of sold out right before it really dipped. And then went back in at the end of December, right before January happened, looking like it was good. And then now the Nasdaq's down 12% in the month of January. So he's obviously down a lot of money. So he sold for a loss for a lot of his stocks. And he's making a bet on the market. He's doing a little bit of a put option on the market. So he's short $1 million on the market. And he's essentially trying to time the market. I'll leave his video in the description so you guys can watch the entire thing. But it was a very fascinating sort of thing to just understand how he's thinking about the market. The way he's thinking about the market is, okay, I know that there's no positive catalyst coming out, and this is his argument. There's no positive catalyst coming up to make the market better, right? To change the dynamics of what's going on in the market. So because I know there's no positive catalyst coming forward, I am going to try to time the market. And by trying to time the market, I'm going to sell at what is not the bottom, but sell for a loss, a decent loss, because I believe the market's only going to get worse. And the reason the market's only going to get worse is because he believes big tech earnings are not going to be good enough to rally the market, primarily because if they just meet, they're going to get sold off, right? Netflix beat a little bit at the earnings and they still got sold off. Or if they don't meet, they definitely get sold off. And then on top of that, you've got the Fed likely going to say, hey, we're still raising interest rates, even though, there's a lot of pain happening in the market. The Fed is probably still trying to combat inflation, so they're not going to not get rid of interest rates hikes, which means if you got interest rates hikes coming, or at least the massive fear that interest rates hikes are coming, and you've got this sell-off that is going on in the market of big tech, and big tech is a lot of the Nasdaq. So when Facebook, Apple, Google sell off because of earnings, the Nasdaq's going to drop more, and the S&P might go back down to the mean reversion, and there's going to be a little bit more pain, or a lot more pain that's going to happen. Then it would make sense theoretically, right? If you're trying to be super objective, if all of that is true, to sell right now in order to time the market for when you get back in. That's sort of his logic here. And it's a really interesting perspective. Now, there's a couple of thoughts I have on this. Number one, I've been seeing what the community has been saying about this, and the community sort of is like, this is a inaccurate way for Kevin to be doing this because it's almost like he's a hypocrite, right? The reason he's a hypocrite, I think he just put out a recent video about Bill Ackman, talking about how Bill Ackman sort of went on CNBC and cried about, oh, the market's going to end in March of 2020, and he had a $27 million bet. He was $27 million short on the market. He cried for the market to get shut down, for Trump to have a lockdown. Bill Ackman's obviously an activist investor. He's one of those people that has an influential voice. People listen to what he's saying. So when he did that, the market spooked out even more, and he exited his short position. He made $2 billion from $27 million, and then he put his money back into the market, and he went long on a lot of those companies that obviously had a massive bull run from 2020 to the sort of mid 2021. pretty phenomenal way to time the market, right? Like you say that things are going to go bad, you bet that they go bad, they do go bad, you pull out your money right after things have gotten to the worst and basically start investing when things are starting to go back up again. That's exactly what Kevin's trying to do right now. And the reason people are saying he's a little bit of a hypocrite for doing this is because, he's been very consistent since March of 2020 to consistently buy the dip, right? When things go bad, you just dollar cost average, you buy the dip, you're down 30%. Okay, you take a portion of your income, allocate it to buying the dip. Eventually, these stocks will go higher. You've got to give it a couple of years to get back, maybe even a couple of months in some situations, and you will come back out on top. It's the most safest way to do passive investing as long as you're investing in companies that are either index funds, and index funds tend to generally S&P 500 go up over time, or companies that you just know, when you dollar cost average, it's just such a good deal. So for me, something like Palantir, I'm dollar cost averaging because I'm like, I really think Palantir is going to go to the moon one day. And so I'm just getting in at these good prices. That's sort of the most easiest way to approach this type of market. What Kevin's trying to do is fundamentally different. And my reaction to a lot of people's reaction is I think it's justified for people to be upset, especially if you paid for some of his courses, and in all of his courses, he preaches this whole buy the dip kind of scenario and hodl your stuff and don't be afraid when the market gets bad and then the hedge funds come out and don't believe all the FUD about the market. This was his recent video about Bill Ackman sort of saying all this FUD and then spooking out people and then just buying the dip basically essentially after you short. So it's kind of a really shady thing to do. Kevin was really against that sentiment. And Kevin's pretty much doing the exact same thing if we had to break it down. So I can understand the reaction to people essentially who follow him that are just hey, this is shady. The way you're doing this is not cool at the end of the day, right? Because you've been preaching one philosophy. We follow you, right? You developed an intimate a connection with your audience. When you develop an intimate connection with your audience, they actually care about you. And, you should care when people care about you, because for people to give you even a little bit of your attention, for the fact that people are watching this video, it matters so much to me. And I try to communicate that to everyone because it's hard to get people's attention. It's hard to get people to care about what your content and the stuff that you're putting out there. So I understand that perspective. However, one of the things I admire, and this is a little bit more of a contrarian perspective, is his guts. Because look, you're not supposed to time the market, right? I mean, we all know the quote, timing the market is better than timing the market. Or timing the market is less valuable than timing the market. I definitely butchered that quote, but whatever, you get the point. It's better to be in the market for a long period of time versus time your exit and then your entry at the points that will give you a maximum return. It is a very difficult thing to do that. And I think what's happening here is I admire the guts of him doing it. Now, is it the right strategy or the wrong strategy? I have no idea. He's way more experienced. He's managing millions of dollars. I'm managing thousands of dollars. So at the end of the day, I really have, I can't really judge him in this scenario. You can judge him sort of morally in terms of how he's being hypocritical or whatever, but I can't judge the actual business sense because I don't know if it's going to work. It might actually work. He might actually pull it off. And if he does pull it off, I hope that doesn't fracture the relationship he has with his audience, because that's a really important thing. I think that's actually way more valuable than some stupid bet on the market. But if he does pull it off, it's not that he looks like a genius, but he made a very calculated decision over someone who has been really investing and studying the market for the past 5 years and been doing it every day, right, for 10 hours a day. So he has this sort of guts, this sort of arrogance, the type of Bill Ackman arrogance to say, I will short the market and exit the market and re-enter the market in a way that is most profitable for me. And I'm gonna show you how I do it. And I admire the general guts of someone doing that, right? Because I like living on the edge. I like taking risks. And for someone to be able to do that as a $20 million bet, it could go out really bad for him, or it could work out really cool for him. And, it's interesting to just see how that happens. However, I do think that it is wrong to try to time the market. At the end of the day, that is a really, really difficult thing to do. So I understand the people who are upset at him being hypocritical. I also admire the guts that he has to be able to do this, but I fundamentally disagree with the strategy of timing the market. I think the bigger you get and the more successful you get, the more arrogant you get. That's just human nature. And I think the arrogance has reached a level to him. And I don't mean this in a negative way. I just mean he's he feels much more confident that he knows how to time the market. He's even explicitly said in some of his videos that people say you can't time the market, and he looks at the camera. He's like, I can time the market. He's like, that's BS. I know how to time the market. Well, let's see if he can time the market now, because I just don't believe in that strategy yet, because I don't think any of us are smarter than the market. And, people may think they are, but at least for the people watching this video, I don't know how many millions of dollars you guys have. I definitely don't have that money. I don't think I'm qualified to put a short on the market at a certain time, to exit the market at a certain time, to enter the market at a certain time. It's a really difficult thing to do. I was on a call on Tom Nash's Patreon, on a Zoom call, and there was this guy on the Patreon that asked, should I sell my Tesla right now because I think it's going to drop? And Tom explicitly was just like, look, bro, you can do that, But the mental health and the mental peace that you're going to save yourself from doing that is going to be way more better. Because if you sell Tesla right now and then it goes up another $200, I think it was at 1,000 at the time, you're going to be kicking yourself in the feet. But now it's down to like 890 or whatever, right? So that guy might be like, oh, that was bad advice. I should have probably sold my Tesla. It's like this is why I think Warren Buffett and all these like big icons, they talk about psychology just as much as they talk about business strategy and investing. Because a lot of this stuff is just psychology. A lot of this stuff is like, okay, how long am I going to temper my emotions to deal with what's happening when I don't have all the data in the world? Because as strong as Kevin is, I don't think he has all the data that institutions have. And, how can I, as an individual person that doesn't know that much, still be able to make a decision that is meaningful? And the best decision is to kind of just wait it out and see what's happening. Now, that doesn't mean you don't sell some positions. That doesn't mean you don't have some leverage. You don't have some hedging bets. But that does mean you don't fundamentally alter the nature of your entire strategy to time the market in the exact profitable way or that can maximize your profit. I don't think any of us can really do that at the end of the day. Now, if there was someone on YouTube that I would bet on being able to do it, it probably might be Kevin, because I think he understands the market more better than a lot of people. And that's not to say he's like the biggest guru in the world. That's just to say with the amount of content he puts out and the amount of like research he does, I think he gets a little bit more of the market than the average person. However, I still don't think that justifies having the confidence to be able to go time it. Like, that's a really hard thing to do. And I don't know. Maybe I'll get to one level in my investing career where I'm like, I can time the market. I'm going to take $20 million out right now. I'm going to put it in the right moment and make it 40 million. Like, maybe, I don't know. And if he does this, I want this to be successful for him because I don't want anyone to lose money. So, if this does work out for him, that'd be awesome. But it is very risky to time the market. And for anyone who watched that video, I know Kevin is very clear in the video and he puts a lot of like disclaimers of don't do this. It's super risky. But here's another disclaimer. Don't do it. It's super risky. Like, it's not this strategy that's just like, whoopee-doo, I'm just going to try to play it out. I'm going to look at some trends and some charts and try to make a decision. It's like, no, like, especially if you do that with crypto, like, you're definitely going to be screwed at that point. Trying to time the crypto market also, it's like, it's rough, man. The good thing about being in the market is that over time, things compound. And when you bet, especially against the US market, it likely goes up over time. And the other thing about tech, especially because I know a lot of people watching this are invested in high growth tech, it's like tech's not going anywhere. Tech is not going anywhere. Nothing has changed about Palantir. Nothing has changed about SoFi. Nothing has changed about Opendoor. Nothing has changed about Unity Software. Nothing has changed about Teladoc or Roku. In fact, nothing has changed about Zoom. In fact, they're growing. They're gaining more market share. So, and I've done a lot of videos on this covering this whole Cathie Wood deep value territory and this whole thesis that like a lot of these investors are just spooked out by a lot of the macroeconomic trends that are going on, but nothing has really changed with these companies. There's not .com bubble companies. There might be .com bubble level valuation crashes, but those were on companies that didn't exist. Pets.com wasn't real. When you're talking about Palantir going down 50%, it's like, but Palantir is a real company. They're actually doing stuff. So there's no reason over time they don't just come back and go even crazier, which is this whole deep value concept, because the market is so underestimating them because of these macro level fears that are going on right now. So because nothing has changed with these companies, I don't believe there is a reason to sell these companies unless you have just totally lost your conviction. And at that point, you need to protect your mental health. But if you have your conviction, it's just numbers on a screen at this point. Down 20,000, it's just numbers at this point. It's literally just numbers. As long as you don't need that money to pay a mortgage or anything important, it's just numbers. And numbers can go up, and numbers can come down. And if you give it enough time, they usually go back up again. But I guess we got to see what happens. Those are my thoughts. Let me know your comments in the video. My bottom line thesis on this is I respect him for doing this in terms of his guts. I admire that. I admire that he doesn't let YouTube comments like sort of dictate what he's going to do. But I do understand the perspective of how he was buying the dip. He fundamentally did a 360, and a lot of his audience doesn't like that. And I think the relationship with the audience is very important. So, at the end of the day, it's just a question of if he's willing to be right on this and how much that fractures the relationship that he has with his audience. Because presumably a lot of those audience members did feel kind of lied to because they were told even weeks before Kevin pulled this move to keep buying the dip. And now the person that they followed, the person that they paid $700 to get some course and some Discord into, just totally switched the strategy. That's where I can definitely see it's like, okay, it's not like... That's where you get a lot of the comments are like, this is shady, this is like fake guru type of stuff. And I can understand people leaving those comments at that point because that is a little bit of a weird move. But I guess we'll see what happens. Let's see if he's able to pull it off. Let me know your guys' thoughts in the comments. Thank you so much for watching. My name is Amit. I'll see you guys in the next one.